Turnaround Tuesday, everybody. How's everyone doing today? That good, huh? Hello, Brock. So, Brock, we're a day away from that cycle you were looking for around the 15th. I asked Norm. Something I want to start with, since tomorrow's the big day for the signing of phase one, is the US dollar yuan, now in the midst of a throw over or throw under of this channel or this wedge. And I think it's something to be aware of, that it could end up being sell the rumor, buy the fact. It was the 18th. Thank you, buddy. So that takes us into the end of the week. All right. So looking at this back inside the channel, that's when I think risk on will be in jeopardy right here. And even with the yen, you know, people are calling it a breakout. Steve showed a chart, and then during our meeting yesterday, Blake was talking about he had resting orders in at 1020. Not trying to steal your thunder, Blake. I'm just saying, you know, he had it this number for quite some time. And can you clean it up a little bit, Blake? The high was 21.5. I thought the high was 20. So yeah, you know, maybe you're a little out of sync, missing top tick by a pip and a half. We're going to know that there's something wrong with this. Again, just like the yuan was a throwover, this, a lot of people are calling a breakout. And you never know if it is going to be a false breakout until it becomes one. And to me, that's under 109.70. So watch that. I lean that way because of TLT. And last week we had a bond auction, and you know, for those of you who watch CNBC, Rick Santelli gave it an A. That's because the bid to offer the coverage was outstanding, with a lot of international buyers hungry for yield came in and bought bonds. But is it just hunger for yields, or could it be risk aversion by buying the bond market? So here's the TLT. It's compressing. It continues to compress. I guess it could compress for another month as this triangle, the lines will end up meeting. We can't go to infinity on this. Hello, Monica. And over 140 is going to be a close over 140 is going to be significant for challenging the high of the move. And here's your weekly. A 2-week reversal would happen at 139.12. So we're a handle away on this triangle. And okay, you can't ignore the other side of it either. We'll have a breakdown under 136. So 140, 136 is going to really give us direction, in my view, of the next move in yields. I've noticed that 10-year, you know, everyone was happy that we were starting to steepen, but the 10-year is actually starting to look, there's your weekly. We're already under the 2-week, well, the 2-week off number is going to be near the breakdown at 175. And the 30-year actually is starting on shorter term. You can see it's actually starting to look a little heavier than the 10-year. Look at this pattern. And look at this pattern. Okay, so what this is saying is the steepening that we were having, which is a sign of a stronger economy, is starting to give way a little bit here. Okay, blow up for the dollar. I'm not sure. I'm not sure. I'm having a hard time deciding what the dollar is going to do. Anonymous. Oh yes, I know. Dollar's going up, and FX call. It's been pounding the drum on that for a while. Euro's starting to look heavy. I mean, we went right to this channel line. I thought we were going to get a breakout here, and it's turning back down. So having it be a turnaround Tuesday. We'll see if we could get a reversal, but FX coal, I'm out of the way. Almost felt like doing it here, but trying to maintain my discipline with stops under 1180, and then I'll give you your due. So if you believe that, why not just U.S. dollar Swiss is almost back at new lows. Maybe you want to buy Swiss here, especially U.S. dollar yen. Okay. I happen to believe that there's potential for one more break in U.S. dollar yen, although we have a breakout. And if you want to notice what it's really tightly correlating with, is look at this and look at S&Ps. Pretty identical. Okay, so I happen to believe that there's one more dip in U.S. dollar yen before the explosion. And I agree with some of the longer term counts, but I don't think that happens until this bond rally completes. But, you know, I'm wrong all the time. Only up. Nothing is only one direction or the other. And I want to look at the gold here. So I thought there might be a shot for maybe a third drive, and we've taken out last week's lows. So we'll see. I can't, I'm tempted to buy it here on turnaround Tuesday if we get a reversal, because we only have two. This would be quite stretched to get a 3 up here, but you know, it's not that I'm always bullish. I wasn't bullish here. I wasn't bullish here, but this picture of these two drives and the top on the second drive being almost 80. Okay. All right. How do I get in your hedge fund? I've been biting my tongue, but I want to join your hedge fund because you seem to be so certain all the time. When I was a young guy, I used to feel certain all the time. Now, I feel certain once in a while, and I'm open to both sides of the scenario. You have insider information from Goldman Sachs. Okay. All right. Well, Jamie Dimon is sitting right next to me, and he's fading Goldman. Okay. Jamie, what do you think of the dollar?
I don't know. I wouldn't have it, but I'll tell you, Bitcoin's a joke.
Oh, come on, Dale. He doesn't talk like that.
No?
All right, let's hear your Jamie Dimon imitation.
I don't do impersonations.
Oh, okay.
No.
All right. Okay. All right. Well, anyway, Jamie Dimon. Okay, so go ahead, take it. The show's over. Yeah. Good morning.
Good morning. All right, guys. We're probably about this is Blake speaking. That was Dale.
Hey, Blake.
We're about a day away from the quote unquote signing.
I have a bottle of champagne here, Doug.
Well, you know, it's going to be a big event. There's a lot of dignitaries. This, as you would expect, Donald Trump's turning it into more of a I mean, it's an event. He's remember, he's a reality star. So
yeah, he jinxed Clemson last night.
I watched the game until
anyway, he was there.
Like the end of the third quarter, and then I went to sleep.
I fell asleep. Yeah, it was a good game.
Yeah, it was a good game up until that point. LSU started to walk away with it, and I'm like, they're gonna win, which they ended up winning. But anyway,
yeah.
How did he jinx the game?
He showed up.
Oh, okay. All right. Well, let's first and foremost, let's talk about. You're right. The euro actually reversed right at a 38% retracement, right at
same line. Yeah.
Right at this little trend line. It's we're going to consolidate between now and tomorrow. There's no doubt. You were talking about the dollar yen. I actually had an order to short the dollar yen at 110.24.
Oh, yeah, 24.
Yeah, it was the 127% extension of this move, and it's interesting. This is the multi-year trend line. So my chart hasn't changed in, I don't know, Dale, how long have you been looking at this dollar yen chart of mine? It's been exactly like
a couple of years.
Yeah, it's been quite
Many
some
years.
time, and so we're knocking our head right up against resistance. Now, here's the interesting thing. You know, I have direct connections to most of the banks, so I got their analysts on chat, and they're everybody's chatting away about certain things, and the universal call right now is long dollar yen. It's breaking out. So, it's broken out above 110. We're buying dips to 109.70. And if it breaks back below 109.20, we're wrong. That's the general consensus. If I had to just, just kind of assess the whole situation from all the banks that we follow, because, as you guys here, I'll just show you really quick. This is just, I'm going to give you just a quick glimpse. This is a chat box that you can see for my Bloomberg with all the different brokers. You can see JP Morgan, Citibank, Goldman, and I get all their traders, and I get all their thoughts all day long. And so I know what everybody's doing and thinking for the most part. And the general consensus, like I said, is the dollar yen's breaking out. It's broken a big Uchimoku cloud, which I don't follow. But I can actually chat back with them. I don't typically allow everybody else to just kind of chat, and I just kind of more, just kind of sit around and listen to what they have to say, and then I'll read the research when they send it out and hits my inbox, that type of thing. This daily trend line is not being looked at by most people. Most people see this as being broken out. I did get interesting. You were talking about the U.S. dollar CNH.
No.
There's a JP Morgan piece that was circulating overnight about this from one of their Chinese analysts was talking about how it could be a buy the rumor, sell the news as far as the CNH goes. There's been a lot of hedge fund covering overnight, and I don't trade the US dollar CNH, but it is something I will be watching tomorrow. So if you're looking at the US dollar CNH, this is kind of, I haven't looked at this chart in quite some time. I haven't really changed
Yeah,
it
it's
at
trying
all.
a little throw over under the channel, trying to accelerate underneath.
It looks like it's quite possible we could have some sort of basically sell off below, but I try not to get too technical with the CNH because it is managed, so it's a managed currency.
Oh, good point. It looks like a managed flag.
Yeah, I mean it very well could be.
Yeah.
But that doesn't mean that human emotions can't be worked into this as well. And you notice that we're pausing really at the 618 retracement. So I'd sure hate to get too bearish the US dollar CNH from here. Now, if it for some reason starts to reverse higher, then we know that is probably going to indicate some risk off. That would be my assumption. So just some things to keep in mind as we move into tomorrow. And I think that was a really good, Dale, that was a really good observation that you've made regarding the US dollar CNH. I'm sitting here looking at the yen, and no, I'm not short the dollar yen. I still have my order out there, and it's going to stay out there because what I'm hoping today is we hit a brief new high from overnight. So overnight we hit 2021.
Yeah.
Like I said, I have my order at 24, so, and it's still there. What I'm more interested in is seeing if we can brush into a new high, and then I can get short, and then I'll see about what I want to do with it after that. Because what I'd like to do is I'd like to get short ahead of tomorrow, and then tomorrow's reaction will be really important. So, whether we get a continuation or we get some sort of reversal. Now, also, one thing that I will be looking for in the event that I do get short some dollar yen is how we react back here at 109.70, 109.75. This is going to be really critical for me, as far as technically, whether we maintain the breakout or not. So we'll see what happens down here. And wow, the dollar yen or the euro dollar is really coming off. The euro dollar, as we were struggling. Let me see, where's the let me pull up a fib here real quick. Out of curiosity, see where we can get a little bit of support here. So we're testing all these lows. Support's going to be 111.08. See if we can, this right here, this hourly candle, we're testing the support. Kind of broke below just a little bit. See, we broke just below a little bit. I'd like to see a 110.09 offer, and I actually might not. I might actually get long a little for a bounce. I love false breakdowns. So anything, if I can get a false breakdown down here, I'm in. That's like my favorite. False breakdown, false breakout. Those are big trades for me. Those are trades that I love to do. And
yeah, because you have everyone wrong-footed.
Yeah, I mean, we went as low as 111.11. This low over here.
I have the 200 holding it on the 4-hour. The low so far.
111.12. Yeah. So I mean, I think we're going to see a lot of support down here, and like I said, even a move down to 111.10. I would take that, the other side of that, at least for a bounce. At least for a 10-15 pip bounce. So we'll see if we can if that was it. We might actually get a little bit lower, but we'll see. I don't expect a lot today. The cable's coming in just a little bit. I am long some pound as we're close to this this triangle support. I like it down here. I like being long down here. But I'll like it even more if we get back above 130.20, because I think it's just being weighed down with the euro. As the euros come off, the pounds come off as well. And the Aussie's not doing anything. This is one of those situations where I have to say, and I know I've said it out loud, and I'm going to have to say it again. The underperformance of the Aussie dollar is shocking to me. It's shocking that we are underperforming in light of this China-U.S. trade deal that's coming up, and we're either going to see that as a canary in the coal mine after because as always, hindsight is 2020, or this is the best buy on the face of the planet right now. And I figured, in my mind, I'm tending to believe it is more the former than the latter. And the reason why I say that is because it's too obvious. It's too obvious that I need to be buying Aussie dollars right now in light of this China-U.S. trade deal, yet it's not going higher. And, I was reading this article out of Bloomberg last night, and, it was talking about how the yen has lost its safe haven status. And I sat there and I said, wow, that's interesting. How could you quite possibly write an article about the yen losing its safe haven status when equities are at all-time highs and the yen hasn't weakened? So to me, I think that this Bloomberg article, here, I'll pull it up for you. Let me see if I can.
I like hearing that.
I'm sorry, it's an FT article. It's Financial Times. It's here.
It's okay. Michael Bloomberg ran an ad to correct what you said.
What's that?
Michael Bloomberg just ran a national ad to correct what you said. He's got plenty of dough.
The currency is strengthened after grim geopolitical headlines, but not that much. Well, of course it hasn't rallied by much because equities are at all-time highs. You know, if equities are at all-time highs, the dollar yen should be, you know, and I know we've had this argument a lot, this dollar yen should be trading at 115 or 120, but it's not. And so I'm in the camp that actually the yen is still very much the safe haven currency of choice. We just it hasn't had a need to perform that way.
Point.
So when, not if, when there is some risk aversion, the yen will strengthen, because we saw exactly that during the geopolitical risk off. You know, the dollar yen went from the dollar yen went from 109.70, wherever we were at, 109.30, all the way down to 108, and the S&P barely even sold off. So, that, in my opinion, is asinine. If we get some risk off, you're probably going to see the yen strengthen quite a bit. Now, and the big question is if it will come, we will see some risk off at some point, whether it's Wednesday, Thursday, or whether it's, in February or March, I don't know. But the market will, sell off at some point, and there will be assets that'll be bought in the FX. And my 2 cents is it's probably going to be yen, and it's going to probably be euros, as euros the one of the main carry trade funding currencies at the moment. So and you're going to see a liquidation of the Mexican peso, and that's one other thing that I need to bring up too. The dollar mex has held up very well. The dollar mex has held up extremely well. We've with risk on, the dollar mex should be well below the 2019 lows. We should be well below these levels. We should have broken down big time already. We should be trading, down here. That's not saying that we won't go down there, but we should be down there, in this risk on environment. I think the risk that is building now is that you're going to get a reversal in the dollar Mexican peso, especially if we get some, risk off activity. We'll probably say move back above 19 in the dollar mex, and probably, back into this previous triangle, and then we're at risk of a complete false breakdown. So
great insights this morning, Blake.
What's that?
Great insights this morning, Blake.
Thank you. Well, I mean, these are just things that I'm, obviously paying close attention to, because
with conviction.
The big kahuna is going to be what happens tomorrow. What happens tomorrow is going to be very much the driver. Tomorrow or the day after tomorrow is going to be, the driver moving forward. I think there is a very high risk of buy the rumor, sell the news. I keep getting into, discussions with the guys in my office about is it buy the rumor, sell the news? Because, some of their arguments are, well, we've seen asset managers that have pulled back and they haven't, by the way, the euro dollar is pushing the support right now. There's
heavy.
Yeah, it is trading heavy, because I'm thinking about buying it here, but I'll let this shake out a little bit. The comments are, is it buy the rumor, sell the news? Is everybody already long? Is there, more of a, is there more to come? Are asset managers going to put stuff back to work afterwards, after a deal has been signed? What are the details? And I'm still in the camp, after hearing all the arguments, I'm still in the camp that it's going to be a buy the rumor, sell the news. But one of the other key components for me is also seeing the S&P and seeing how the S&P reacts up here. If you guys haven't been following this webinar as of late, you guys know I'm targeting 3,300 in the S&P. That's 161% extension of the 2018 late year sell-off, and it's also 161% extension of the Iranian blip, if you will. And so so that's what I'm paying attention to right as of this moment. And where we go once we hit this 3,300 is going to be very, very telling to me. But 3,315 roughly, and I think on the cash market it'll probably be about 3,305. So you just watch your charts respectively. What I would do is, depending on what if you're looking at futures or if you're looking at the cash index market, is just take the 161% extension of the Iranian, the bombings that happen in Iraq, and from the whole Iran situation. Take that sell off and project out 161% extension. It'll take you right to where I'm talking about, and I think that's going to be extremely critical moving into this next week. So with that being said, I hear Stelios and Steve are here. We have some data today, don't we, guys?
CPI.
Morning.
Good morning.
Good morning. So we have some CPI data coming out. Markets hoping for some strong inflation, consumer prices, and we have CPI in the U.S. and it's the market's looking for month over month 0.3%. So we'll see if we can put in a decent, healthy number. I know the market's hoping for some inflation, but what do you think, Stelios? Steve, what do you guys think?
I'm crossing my fingers. I mean, I can't imagine life without prices going up for the consumer, even if possible on a weekly basis. I mean, who doesn't want that?
You get a weekly basis of higher inflation. God, that'd be awesome.
Yeah.
I want grocery stores to actually change prices on the fly higher as I'm shopping.
Yes. So the moment you get in the shop, you'll rush to put everything in a bag, because until you do that, prices will have changed.
Especially if you pay with Bitcoin.
Yeah.
Guys, can you imagine that? You go in with Bitcoin and it's fluctuating and you buy groceries.
Oh my God.
You guys know what I want. I have two daughters, okay, and I want them to study eventually, maybe in the US or the UK. I want education costs in universities to rise with this
even further, yes.
No, to rise with this reported inflation. I will be happy with that.
Oh yeah, everybody will be.
They're rising double digits every year. That's the thing.
All right, guys. Well, the sarcastic remarks I can't take anymore. But hey,
you want to hear Mike Jamie Dimon one more time before you go?
But guys, remember, if you want to join the Forex Analytics community, we have our special New Year pricing that happens only once a year, and it will be live for the next week and a half. But don't miss out, because if you've been on the sidelines waiting to be part of the Forex Analytics community, this is the time everybody takes advantage of. There's 2 times a year, at the beginning of the trading season and at the beginning of the new year. The beginning of the trading season we always look at as the end of summer. So this is the last time you're going to get this type of pricing for quite some time. So take advantage of it. And remember, if you are also, whoops, I need to go to the dashboard here. If you're like, you want to try to be involved for free or help your trading reimburse you, join the reimbursement program. Talk to Forest Park FX. They might be able to get you in where you can have your trading help compensate the very small cost of being involved in our family. So, all right, guys, I'm going to pass it over to you. You guys have a great one. Good luck today. I'll see you tomorrow, or I'll see you later on the Daily Roundup webinar.
And you'll see, and members will see Blake in our members chat, which we're thinking about renaming.
Yep.
Yes.
Okay.
It's where I'm at all day.
Yeah. Okay. Thanks,
hey,
Blake.
That's what we should call it. That's where we are all day.
All day.
Chat.
Yeah. They're all day.
Okay.
So let me drag here the data flash.
It's only US data we have, so pick a
let's see.
Maybe dollar yen or euro.
Yeah, we have dollar yen
whatever
here at the bottom right. We have euro USD in the middle, in the top row.
This week,
cable S&P.
This week,
Yes, Dale?
apart from tomorrow's announcement, it's really CPI and retail sales from the US and UK. That's the big numbers. Okay, they're out, or they should be out.
Yeah, a little bit weaker than expected.
Marginally. Year on year, it's the same. Month on month, 0.1.
Yeah, only the
So
month on month, yes.
Yeah.
So the yearly is exactly as expected.
That's not going to do
Still
much.
higher than supposedly targeted inflation.
Yes. Yeah, okay, I don't think
So
anything.
far, no real reaction from the market, and it makes sense. I mean, the data were more or less in line. Okay, Stelio, I don't think we should see any real big movement following that just because of that. So what else did we have?
It's been very quiet, actually. We had nothing data-wise. The only kind of thing we can mention is Boris Johnson was speaking today about the Scots. They want to have another independent referendum. Their first minister, Nicola Sturgeon, wants one badly. And remember, we had one, what was it, two and a half years ago? So
I think something like that, and it was like a 52-48 or
yes, it was close. It was a little bit more, 54, whatever. It was 50 something. But you can't have one every year or two or every 3 years, right? It's a pretty big thing. But anyway, Boris Johnson basically rejected this request. I actually don't know him rejecting it. What effectively, if that dictates anything on the Scottish side. But anyway, he said the referendum would continue the political stagnation that Scotland has been seeing. So, a bit of blah, blah and all that. But basically, he's against it. And he's been pretty clear about it. It's interesting because the Brits want to get out of the European Union, but so they want their independence. But when Scotland wants its own independence, they're like, no, you're better.
Then independence is not a good thing. Yeah, the usual,
Anyway,
one thing I have to say about Boris, he's not easily intimidated, and he's not bashful. He actually told President Trump to dial down the intensity with Iran. He's not afraid to address things with President Trump, like a lot of other global leaders are. So I like that aspect of him.
Yeah, he's definitely different. And from day one, he's been, I have to be honest, before he became prime minister, I was pretty scared of the possibility of him becoming prime minister. But he's been, he's got things done, and he's been a little bit vocal. But, let me put it this way. In my opinion, he's been doing a better job than Theresa May. That's for sure. So,
you just set the bar very, very low.
Yeah. Well, here, ring the bell.
Passing over that bar was quite easy to do.
Ring the bell. Stuart Adams has taken us up on our promotion. He said he's been waiting.
Oh, great.
Perfect.
Welcome to our community, Stuart.
Indeed.
All right.
Welcome. Yeah. So I'm struggling to find things to talk about it, but because there's actually nothing happening. It's all going to be about tomorrow and the signing of the deal, which, by the way, they've said there's been. I saw a headline saying that they may not disclose details of phase one. So
that makes it even funnier.
I don't think the markets would like that, but you know what they're like. They might dip for a bit, but
everything is great, guys. We just signed phase one deal. Okay, what does it involve? We can't tell you that, but don't worry about it.
It's classified. We can tell you, but then we'll have to kill you.
Yes, but don't worry about it. We signed it, so everything is perfect. Just buy everything.
Yeah. So that's really what we're waiting for tomorrow. We have a UK CPI tomorrow, which is also quite important. And struggling to find things to say, Steve. Sorry, I don't have much.
Okay, bro, no problem. We have quite a few charts to have a look at. So there were a few questions that I didn't even cover yesterday. So I'm probably going to start from there, and whatever other question we get. So okay, thanks, mate.
Thank you, mate. Thank you,
Coach. Anywhere specifically you want to start from? Coach?
Maybe he's out doing his Jamie Dimon.
Indeed. I know where he actually is. He's in the toilet. It's his usual toilet break. Okay, so first of all, let me start from the USD yen. I lost a few minutes at the beginning. I don't know if Blake mentioned it. I think he did at some point, but anyhow, watching the confluence of resistances up there. I mean, I know that Blake was looking to be short. If you really want to be short, you know, unless you're a scalper, I mean, it's fine shorting it even here, right? Now, as I said, unless you're a scalper, because still, I mean, we're talking about like a, you know, a very limited upside if indeed this confluence works. In which case, you know, if we get a rejection from there, where you can see a move all the way back towards 108, right? So USD yen at, you know, quite a key area, approaching quite a key area. At the same time, you know, indices also, you can see here testing the confluence of resistances up here. The S&P is still at the same area we left it yesterday. Nasdaq testing that ascending channels, trend line resistance. The DAX still unable to really pull back, but you know, we have this again a confluence of resistances, actually, because we have this ascending channels, trend line resistance. We have the, you can more or less call it a previous double top up here from the beginning of 2018. And this is also the 127% extension of the last pullback. So, you know, more or less, you know, all indices are on a resistance now. Usually when I see something like that, it comes to mind that probably the most likely action you would expect is, another push to the upside to take out all the bears and then a reversal lower. So that would actually coincide very nicely with the timing of tomorrow's deal. I mean, we might see like a pop tomorrow, and you know, then buy the rumor, sell the news, as Blake has been saying, that will lead to lower prices. So, you know, tomorrow is an important day. Stelio, you like to hear Amanda's voice again and again, I hear, right?
Yes, sorry. I was sorry.
No problem.
Sorry.
Now, before I check today's question, we had a question yesterday that I didn't have the time to cover. It was, what do I think about USD NOK and USD SEK? I'm going to also throw as a bonus Euro NOK in the equation. So the USD NOK rebounded from the previous resistance area. You can see how many times we found resistance in that 880 area before we finally managed to break out. In this case, this was confluencing also with a 61.8% fib, so we've seen a rebound from there. Now, I have to say that so far, I'm still short, by the way, a half a position. So I have to say that so far I'm viewing this rebound as corrective. I mean, it might as well be a bear flag. I still like it to the downside, and 890, 892 should continue acting as a resistance. So that's what I'm looking for. I mean, if the pair wants to continue lower, I'm expecting that might happen from where we are now. USD SEK, the exact same situation, meaning, you know, it has rebounded. The rebound so far could as well be corrective. I mean, it can be a pennant, as you see. And, you know, we're also confluencing here with this horizontal support resistance area, this broken head and shoulders neckline. We're currently retesting it. It's inclined, as you see. A little bit higher, we have the 50 and the 200 daily moving average. So, you know, multiple resistances here. So, you know, USD SEK might as well continue lower from here. I mean, we've worked out the oversold conditions and this RSI divergence. I think we can easily, put like a short-term high there and continue towards the 61.8% fib at 921. Anyhow, the risk reward is definitely in your favor. If you may want to make an attempt to short here, you can risk like, just, a few pips to make a lot more. So, and, I said I'll throw the Euro NOK as a bonus, and here's the Euro NOK. I still have exposure here as well. I'm deep in the money, and the rebound is also corrective in my opinion here. We did find support in this long-term ascending wedge. You can see it here, but nothing says that we can't actually break down from there. And I don't really want to not have a position. So this might as well also be a pennant here, right? So I think that the NOK and the SEK still look like, they're quite well bid. Now let me go through but Scots referendum for a generation, 30 years, 55.3 to 44.7. Yeah, so it was, okay, somewhat close. As a Scots, we are more in England than in Scotland, and the intermarriage is close to 90% white trade independence from London to subservice to Brussels. No, I don't disagree with you. And neither is Stelios. I mean, he's not an advocate of one way or another. If we have independence, it should not be trading one master for a worse one. The Greeks should know what I mean. Yeah, I'm with you. I'm with you. I'm with you. I don't think one alternative is better than the other. So yeah, and people might decide what they want to decide, and I also don't see much of a benefit leaving to go to the European Union. So that is that. But Scots would be eliminating at least one master. Yeah. Gold and silver. Still, Steve, please your comment on USD NOK. Okay, we had a question about it today as well. Already covered. So gold and silver. Yeah, let's have a look at commodities in general, not only metals. So gold, another push lower earlier on the day, but nothing has really changed here. You can see that we're still following what looks like a bull flag. So as I was saying, I think we also had a look yesterday on the 4-hour chart. So let me switch to that. As I was saying yesterday or the day before or whatever it was, I was not against another push lower. Actually, I found it quite likely, and even lower than where we currently are. I mean, we can, this is what I drew some time ago, that, we might see a little rebound, which we did, and we might see another plunge lower, which we did, but I was assuming that we might even come lower than that towards 1520, and we might, we might actually end up doing that anyhow within the next few hours, few days, who the hell knows. Now, I would assume that the general plan doesn't change here. We might have something like that. We might have something like that. Who knows? It's not easy to draw the trend line yet. Too early, right? Something like that before we can move higher. Now, how do you get confirmation that the corrective move is low, is over, and we're headed higher once again? In my opinion, the safest bet here would be to look for a higher high. So we had this little rebound top out at 1563. So anything above 1563 is probably enough of a confirmation that we're resuming higher, in which case I would be looking for a move towards 1625, the 161.8% extension of that corrective move we had. When we have more confidence that we found a low in this corrective move as well, then we can also fib extend that move and see if perhaps we have a confluence, right? So, we might have a confluence up here, who knows? For example, let's assume that was a low, which, it's not very likely, but let's assume. In that case, we would have the 127.2% being quite close. If we move lower from there, depends on where we move. We might have some other fib extension higher. Who knows? I still think, though, that this move is corrective. Same thing with silver, right? I mean, silver is putting another leg lower as well, stalling once again at this 1770 area of support. Even if we break through it, I would assume that we shouldn't be moving much lower than that before we can resume to the upside. So, again, you can draw this corrective move, somewhat like this or whatever. And, then a resumption higher. I would also be paying attention to this trend line resistance in the RSI. Would give an extra, confirmation that we're resuming to the upside. In this case, I would be looking again for a higher high, which means something above 18.1 should be sufficient. Okay. So bottom line, still correcting lower in both those metals, but in both cases, I'm still looking for a resumption of the uptrends sooner rather than later. Customs at Berwick and etc. ruining Scottish-based companies and irritating the millions of Scots south of the border. Yeah, I actually, have had this discussion. I have my wife, one of her best friends in school, she's married to a Scottish guy that lives here actually in Greece now with her. So, we've had this discussion. So, I know exactly what you're talking about. Dollar going up for sure. Yeah, okay, dollar going up for sure. I'm not going to go in this discussion again. We've talked about it again and again. Yeah, I mean, dollar has been producing overlapping moves in both directions. So if there is one thing certain about the dollar, is that the
It's
dollar has no.
uncertainty.
Yeah, the dollar doesn't have a clear trend as we speak.
I'm certain about the uncertainty.
Yeah, I'm quite certain that there is no clear trend yet. And I think that when we do get a clear trend, it's going to be lower. But that doesn't mean that we can't have been drifting higher as we were for some time until that happens. So I'm not excluding the possibility of seeing, more upside in the dollar in the same choppy manner that we've had for, quite a lot of time. And over time, this can lead to higher levels. I mean, can lead to 100 again. Who knows? 102. I don't find it very likely, but I definitely don't find it unlikely. But I do think that when we finally see a decisive, strong movement from the dollar again, which might be even months from today, it's going to be to the downside. So I want to be there for the big move. I don't want to be there for the slow move. I want to be there for the big move. So far, I'm short the dollar against the NOK and I'm doing quite well. So far it's a market that you can still make money either being short or long, as long as you pick the timing correctly and you also pick the pair correctly. Because not everything is performing as well or as bad against the dollar as the rest. So you have to make the right choice and the right timing for the choice. Regardless, what I said several days ago still remains to be the case. This is the fourth day that we're testing the bottom of this horizontal support resistance area. On average, it's at 97.70. So, we are bumping our heads on the resistance. So buying it, right at resistance doesn't make much sense. You want to buy it, wait for a daily close above this confluence of resistances. That at least will give you, higher confidence that, at least for the short to medium term, we're moving again to the upside.
Steve,
Now,
can you take a
yeah,
look at for me? I know I'm not part of the attendees, but
whatever you want.
I tried to bottom pick Canada when I thought crude was topping before the spike, and we had that one more break on the weekly under the 30-20 low, and here we are trading back at 30.73, and now that I believe the trend has changed, even though we could rally back to 61, 62. Is that starting to look like some type of bottom formed, and that was kind of like a shakeout move under major support to you?
Okay, listen. The only bullish case scenario I see here, which isn't something to dismiss, the bullish case scenario I see here is a medium-term bullish scenario, which is the following. I'm going to draw it out for you as we speak. So let's take this, and it's this one.
Okay.
It's this one.
Okay.
So Now, the USD CAD suffers also from the same disease that the dollar in general suffers from, which is the following. If you look at the price action and you zoom out, there are a few certainties here. One of them is that this move higher was impulsive. I mean, we can see how impulsive it was, especially when you see that leg higher was parabolic, really. I mean, it even overthrew such a steep ascending channel like that one we had. Then we had a very sharp corrective move lower. We had this rebound, which was clearly corrective, which means that even if this move lower was corrective, it should have at least one more leg lower. And I was expecting that. That happened.
Yeah.
And now we've had a move higher, actually a multi-year move higher following that, that has the problem that isn't corrective, isn't impulsive in nature. I mean,
Okay.
I would have expected to see, the uptrend reassert itself if, that was not a
Based on
trend.
the impulsive move in
Yes,
2016.
yes,
Okay.
but that hasn't happened. So
No.
we know that probably we're still within a much larger corrective move of that impulse. So the problem here is, how exactly can you be sure when this is over and when not, since we're seeing in both directions of the
By
market?
probing and protecting at important
Yes,
areas and
exactly,
letting the
exactly.
market tell you
Exactly.
if it's
So
you're right.
bottom line, since we are in a market that still produces overlapping moves in both directions, this is a market that somebody should trade using mostly, targets, resistances, supports, and not overreaching, not being too aggressive with
Well, not having too
the
high of
targets.
expectations. Trade
Exactly.
it, but you could hold a core for position. The tell to me is how it took out that support level with the big red candle, and now it's back above it. When it took out the July lows, and now we're back above the July lows, which has
Yes,
me
the problem,
interested.
the problem though with overlapping moves like that is that they create several technical formations which you don't know which of those to trust and which not. For
Yeah.
example, we are within this descending triangle, okay, which looks corrective, so we might as well continue higher from there. But at the same time, we've had this channel which we are back testing. This is the fourth day we're doing, so we're currently trading above it, but we were also trading above this broken channel support yesterday and Friday and Thursday, but in every single occasion we ended up closing at resistance and not above it.
Thanks for your love, buddy.
Yeah, so I do see the appeal in being long against that low. I do see
And
it,
how
and we
about
might.
the correlation with crude? What would that support? If you think
You
that
know,
was a high last week.
the correlation is not that high, but definitely crude still affects USD CAD. So it will act as a headwind or as a tailwind, depends on what happens.
Okay.
So one thing is for sure, if crude, and let's go to crude since we're talking about that. If crude's high here and this big reversal is actually, an important high in the market,
which we won't know until we look in the rear view, but yeah.
Yeah.
Okay.
Speaking of which, crude is finding support by backtesting this confluence of this horizontal support resistance area.
Right.
You can see that it has acted multiple times as support or resistance, and also the 200 daily moving average. So this is an important level for the market, and we need to see how the market is going to react from here. Okay. I mean,
okay, let's say we're going to 43 crude. Is that going to be supportive USD CAD?
Oh yeah.
Okay.
Absolutely.
I rest
Absolutely.
my case.
Absolutely. So
if I'm right about crude.
So
okay.
especially given the big reversal that we had on crude,
Yeah.
and if you are more of a bear here in crude, yeah, I mean the thesis for looking for higher prices in USD CAD becomes all that stronger, right?
Okay, I have to go. I'm going to write a blog about it right now. No, okay. I'm going to let you. Hey guys, thank you very much for letting me interject. But there are times, that I want to know, just like you, from the crew. Okay, so anyway, I hope you guys maybe will think about crude and the Canadian now with what's happening. And Steve, go ahead and oh gosh, it's almost. I'm going to shut up for 6 minutes or so. Go ahead, Steve.
Who do we have for an interview, by the way?
Ben Maldonado, who's been
Okay.
watching the 1970s analog with Nixon, and you know, there was an oil type thing going on there, etc.
If he's also looking for inflation to start picking up, I'm with him.
Okay, he's very good. So Ben
Because
will be with us.
Because the 70s was the decade, you know, of
Well, let me say
inflation.
this. One of the first interviews that I had with Ben, he was looking at the weekly breakout on gold, said, you know, we get through 1360, close your eyes and just buy it.
Oh yeah.
So
No
that,
question
you know,
about
he
it.
was there before the breakout of gold. So some
from
good
what I
work.
understand,
I'm looking. Yeah.
Yeah, so from
that.
what I understand, we're looking the market in the same way, more or less, with
Yeah.
Ben.
Yeah.
Okay. Now, there's a question here. If this is a head and shoulders formation in the pound Aussie, it might as well be. I've drawn it out on the 4-hour chart, and yes, it might as well be. It's not the most beautiful one you've seen. I mean, you know, there is not such a nice symmetry in the head, but the shoulders might end up being decently symmetrical. So, yeah, I see exactly what you're talking about. And in any case, I was looking for a rejection up there when we were testing this 190. We got that. So, you know, definitely a break below this previous low is going to be a better signal, right? I had already marked here on the chart that, you know, below that area, we're moving lower. You want to look at it as a head and shoulders formation. You want to look at it any way you want. But yeah, I'm definitely on the camp that pound Aussie below 186.50 is bearish, and it should produce continuation to the downside. So yeah, I see where you're coming from, Dillian. DXY pushing into a 30 pip compressing triangle from late last week, 2-hour and 4-hour chart, play the range in Euro USD. I'm with you on both camps. I mean, yes, I don't think you should be trying to trade the Euro or the DXY for that matter, you know, trading up and down here. I mean, I think that you shouldn't be trading the Euro short as long as we are above 110.80. And I think you shouldn't be trading the Euro long as long as you know, you're not willing to do it against support, or then you should be looking for a breakout. Clearly there is no trend here for the time being. So my personal recommendation is the usual one, which is find something that looks better as a chart and gives you a higher chance of actually catching up a decent move instead of, you know, trying to navigate through this, you know, intraday turbulence that in essence leads nowhere for the time being. Mm-hmm. Yeah, professional journalism folks. Yeah, I agree with you. You're referring to when Blake was mentioning that. Yes, and I agree with you. I mean, usually journalists, especially, you know, on turns, they are the best contrarian indicator. Let me see. Can you ask your Scottish friend what he wears under his kilt? Yeah, I will do so. Oh, come on, Steve. Let's have a Brexit vote here on the show. Yeah, let's do that. I bet, you know, they're going to listen to us. Okay, Dale. He who bottom picks ends up with stinky fingers. That's indeed a, you know, solid advice. Why trade unity in the UK, which observes Brussels and the common austerity and lower standards of living? Severe austerity. Now, you know, Richard, you know, I'm a little bit in disagreement with that, because the problem is that the vast majority of the developed countries do need to go through austerity. And the reason they need to go through austerity is because the previous generations were blowing through money that weren't there. And, you know, if they don't rebalance their economies, there's going to be time of reckoning that's going to be much, much worse than short-term austerity further down in the future. And, you know, that time of reckoning is also going to bring a lot of social unrest, much more than austerity is going to bring. So in essence, it's all about, you know, What do you prefer? Short-term pain, or long-term, uh, devastation? So it's all about that. Scots in England not being allowed to vote in Scots national referendum at the last time is not democratic. Democracy unfortunately has been watered down so much in many aspects. It's not that democracy is not without its flaws. And as I've mentioned time and time again, the biggest flaw of democracy is the political cycle, which unfortunately creates a lot of issues. I think there are a lot of flaws with the current political systems. Not easy to fix, admittedly, but definitely, the democracy we have in developed worlds is far away from what would be ideal. So,
The Athenians had the perfect democracy.
they did, but keep in mind that
Where's your time machine?
it's very easy to praise the original democracy in Athens and in some other parts of Greece, but keep in mind that back then democracy was not what we call democracy today. So first of all, the people that have had the right to vote were not everybody, but
The
selected.
elites. Yeah.
Yes. And one of the logic behind that was, if you give voting rights to people that don't have are not in the haves, they will democratically vote to confiscate wealth from people that have it, which is the exact same logic that the founding fathers built the American Constitution around. So, the logic that you should have,
or as well informed. Maybe it should have been an educational.
You should have a system with democratic elements, but in which property rights and everything else is actually protected from
confiscation.
The majority, from confiscation through majority vote. So it's pure democracy, like everybody has an equal vote for everything, is not something that works. We know that. So you need to, even democracy has to be in moderation in order for it to work.
Yeah, and in California, in the divorce courts, there's no democracy. And you know what else? I want to give Ride the Curve. I want to give you a high five with my stinky fingers today. Put out your hand, man. Way to be, bro. All right. Anyway, no one's going to stop me from bottom and top picking. That's who I am. Stinky. And you know what? I also have those gloves that hygienists wear and surgeons wear when I'm clicking my mouse. So don't worry about it. Anyway, should I talk to Ben now?
Should I stay or should I go?
Oh God, I hate that song.
Time for singing. Oh my God, whichever song we've suggested lately, you hate all of them. What's wrong with you?
That one's so weak. I mean, the guy is asking, his girlfriend, should I stay or should I go? What, I mean, doesn't his opinion count? I am
Perhaps you're not looking at it the right way. Perhaps he's blackmailing her. Like, should I stay or should I go?
Yeah. Anyway, I know you're too young to know about our gang and Spanky, but I joined the He-Man's Woman Haters Club that Spanky started with Alfalfa and everyone. Anyway, so let's talk to Ben Maldonado, who has logged in here, I think, 10 times. I hope I get the right Ben. You've been cloning yourself here. Is that cool, Steve?
Absolutely. Go ahead.
All right.
I'll stick around to.
You see how he is. Ben's name is here, like, I don't know, 10 times. We'll see if it works.
4 times, actually.
Yeah. All right, Ben, I hope I.
How has he done that?
Yeah. You're hacking our Zoom, man.
Oh, 3 times now.
Are you there, Ben? Did I pick the right one? I unmuted you.
I have an idea. Why don't you promote all of them?
Okay.
And mute all of them and see which one actually speaks. And we can then mute the rest.
All right, let's try this one, Ben. I'll make him a co-host. See how that works.
It doesn't have to do with anything if
Oh,
he's
really?
a panelist.
You hear us, Ben? I see a sound thing going here. Unmute. Try that now. Won't let me unmute. I'm still not sure why you logged in all that. Okay, I think this is the last one.
Hello, Dale.
Hi,
There
Ben.
he is. I see which one it is. I'm gonna mute the rest.
All right.
I was working my magic this morning and coming in multiple times.
Okay. Yeah, I didn't know that you had 4 brothers and clones and everything. Were you here when I acknowledged? Remember the interview when you talked about a breakout in gold over
Absolutely.
1360? So
Yeah. Yep.
yeah, you probably amazed that all the interviews that I remember things like that.
You do. I've seen you do it before with others. You have a good memory for specific things.
Yeah, I can't remember how I remember. But Ben, I'm really looking forward to seeing your work here, and I'm still trying to figure out how what's happening with Iran fits into your analog, because the hostage situation was under Carter. So anyway, take it away. I see your grid up here, and go ahead.
Yeah, it's I'm really excited to be back here with you, Dale. It's a new year and a new decade.
Yeah.
And we're going to take a little wild journey here for the next 30 minutes. But to start, we're going to go back in time and see how our old friend, the 1970s analog, is doing.
Okay.
We talked about this almost a year ago. The cycles that I follow are connected with the same thing people experienced in the decade of the 70s. The connections are numerous, and they continue to grow as we move through time now. More and more similarities and connections to what happened in the 70s is happening now. Just to briefly go over.
Well, right now I just recognize one, and it's something that the general trading public will be aware of. We've been talking about a megaphone recently over the last year or so, and I see that megaphone right there.
Yep, there's your view of the 72 to 75 period. We had a strong run up, a megaphone, a kind of blow off top, and then we rolled over. The connections that I want people to understand, so that they can go back, they can check their history, and they can see. We had a president who was Richard Nixon, who was battling with the Fed. Trump is publicly battling with the Fed now. We had a president who was battling with the press. Nixon called the press the enemy of the people. Trump has basically said the same exact thing. In the investment world at that time, we had the Nifty 50. There were the 50 growth stocks that every portfolio manager and everybody needed to have. Today, the version of that is FANG and the tech stocks. Even more amazingly, the president at the time, Nixon, was connected with China. He was the first president to visit mainland China. He opened up relations with China.
Yes.
And we have President Trump now connected with China in a very different way, more of a confrontational way. But there's, again, history doesn't repeat exactly, but it certainly rhymes. The most recent one to come up that was amazing was, and it's only happened 3 times in the history of our country, we had a president impeached. Nixon was impeached while in office. Trump was impeached by the House of Representatives last December. The other thing that's a little more under the radar, but I've been checking and sort of making these other connections, is the 70s was a time of great social unrest. And it was characterized by marginalized people fighting for their rights. So people that felt left out or felt like they didn't have the same chances as everybody else were fighting for that opportunity. And today we're seeing the exact same thing.
The most recent connection, and you brought it up, is Iran versus the U.S. In 1978, 1979, the U.S. was turning from a sort of sponsorship of the Shah to a confrontation with a theocracy. Iran took over the U.S. embassy on November 4th, 1979. So think about this. Not only is the connection there between the battle between the U.S. and Iran, but it's both centers around embassies. Right? In 1979, they took over our embassy in Iran.
But isn't that 4 years out of this analog?
It's out of the analog, but again, you got to look at it as a decade, right? This is a massive cycle, so it's the overriding theme that is occurring within this time frame.
Okay, I have an open mind.
Yeah, and so
I'll give you 4 years.
Yeah, the connection that I want you to look at too is they took over our embassy in Tehran in 1979.
Yeah,
this whole conflagration started because they attacked our embassy in Baghdad.
Yeah. It's amazing. Yeah.
The other thing I found, which was also very interesting, was environmentalism was huge in the 70s, and conservative populism. They called it the silent majority.
Yes.
Which is basically Trump's constituency right now. All those things were present in that decade. So the connections are obviously there. If you want to look and compare to what's going on now, let's go to the present time. Here's the megaphone that you talked about.
Yeah.
Exact same structure, and now we're putting in this blow off top. The odds currently favor that we are putting in this high somewhere in this time frame, and we're going to start to see much greater volatility and downside moves in the stock market. And it's not a massive prediction that I'm saying, oh, it's going to happen for sure 100%. But it's one that you look at the odds, and the odds certainly favor it.
Wasn't there a count, Ben, in your last interview that showed a pullback first and then the blow off?
Yes.
Or is it because that really didn't manifest, that we just went into melt up mode and it changed it?
Absolutely. That's exactly right.
Is that what happened?
That's exactly what happened. We were looking for another pullback.
So was my account.
But here you have to, that's one of the key things about the market, is you got to be flexible, right? And when price tells you something, you adjust.
Yep.
And it told us that, listen, the melt up's underway. I put out some tweets early November, like November 2nd, November 3rd. It's still there, the pinned tweet, talking about, okay, listen, this is what it looks like is going to happen. So you got to adjust, and you got to be ready for the melt up. Just last week, I put out some tweets talking about, it's time now to be cautious. I don't know exactly where this top is going to be, but we're in the neighborhood, and the risk reward is tilting away from longs and more towards looking at the short side when price gives us a good setup.
Okay.
An example of some of the ways that I look at this is, here's your ES monthly, right? The squares show geometry. The circles also show geometry. We knew that when we broke out of this arc of this circle and got above this red line here, that we were set for a launch. And now we've gotten the launch, and the risk looks at least to come back to test this. If we can test this successfully, then we can longer term move off and make higher highs. If we break below it, you got to look at some sort of waterfall decline.
So big red line in the sand at S&P 3000.
That's right, in that area on a monthly basis.
Okay.
Here's a look at the weekly. Shows that now we've sort of captured this ledge here, like around this 3270, 3265 area.
Yeah.
As long as we can stay above that, we can still move higher. If we get caught below that, that can be, the initiation. You can start looking at shorts. You can start looking at, weakness down to this 3020, 3030 area. And look how nicely this acted on the way out. We broke out, we came back and tested, and then
that was really the key right there.
Yeah,
and that's last green arrow.
Yep, and that's what this geometry gives you, is the ability to see these moves when they come back to this area and hold it. It's the launch pad.
Okay, now I see a couple of the vertical red lines, one coincided with a high, one came in after a low, and we're approaching another vertical red line now. Is that time?
That's absolutely time.
Okay,
And
so
I think what you're saying is absolutely right. Between now and the end of the month, is this time zone where at any time we could put in the high in the next 2 weeks.
okay,
And that's why I got people, myself and anybody that listens to what I say or, relies on it.
and
in
the
any ways.
horizontal lines are supply and demand, kind of
Yeah,
like
this is
resistance.
support resistance. That's right.
Okay, nice look.
Yeah.
Yeah, and there's your meg. Yeah, okay.
Now-
Oh, there we go.
Now, one of the things that I want to talk about is the theme for 2020. And Steve brought it up, and I am absolutely 100% on board with him, is that one of the characteristics of the decade of the 70s was massive inflation. And I believe we're on the verge of unleashing inflation like we haven't seen in decades. And it's not just looking at the analog and saying, oh, because this happened then, it's going to happen now. I do the exact opposite. I look at the charts, I look at price, and I say, what is price telling me? And then if price is sending me a message, I go back and then look at the cycles of the past and say, where does it fit? And inflation fits. And what you're going to see in the next 8 or 10 charts in different markets is a similar price structure, all poised to break out, signaling that we're coming back to an era of inflation. The other thing, Dale, and you'll appreciate this, who was the man who slayed inflation?
He just passed away.
Paul Volcker. And he just died. And it's interesting
Yeah,
that
I didn't even think of it in terms of that context. Yeah.
think of it. He dies and inflation comes back.
Huh.
That's a theme that I'm looking at. And it's interesting in the timing, and it's the cycles and everything. So I don't think it's a cause effect. I think it's just another sort of mile marker to look at.
He was very worried about the state of the Fed and it's losing its independence before he passed away.
Absolutely. And he's gone, and he's the guy who killed inflation. Inflation may make a comeback.
I made a killing on when he killed inflation.
Yeah.
Those were kind of glory days in the late 70s. That was 880 gold was a peak when Volcker went to work. Go ahead.
You bought those 15 and 20% T-bonds, right?
Yeah.
Unbelievable.
T-bills were 19, 20%.
Unbelievable.
Yeah.
So here's the first thing I want you to look at is soybeans. This is a monthly. Every one of these longer term charts I'm going to show you are all monthly. So these are big long-term trends. It's not a 4-minute chart. It's not day trading. This is what sort of the big wave that we're looking at. Soybeans has basically been in a 7-year downtrend. We are in the process of breaking that downtrend line. And notice this where the support came in again on one of these support resistance lines.
And that last low was due to the trade war, right?
Mm-hmm.
And now we're coming out of here on the resolution because that's one of the biggest things the Chinese are going to be doing is buying ag products. So the trade war looks like the final low at that support level. What was that, about $9, $8.50, something like that?
And it was a false break low to boot on support.
That looks good, man.
Yeah, beans looks good. Here's another one.
Beans in the teens.
Wheat.
Yeah.
Notice the pattern? Similar pattern.
Yeah.
Here we've got an 11-year downtrend.
Yeah.
We're coming up out of.
Like
on the monthly, a series of higher highs and higher lows. Wheat looks like it's set for a breakout.
Yeah, and you can't eat gold.
Nope. Corn is a little less dramatic as the others, but it has a similar pattern with the
saucer.
Made a low, higher low, another higher low.
Looks like the VIX.
Mm-hmm.
Corn and VIX correlation. Yeah.
Here's one that's already broken out. We talked about that before.
Yeah.
And the breakout. I think gold goes much higher. It looks very bullish. At our last talk, I gave an initial target of 1614 in November.
Yeah.
Our high was 1613.30. But I think we
Nice.
go higher. 1686, 1759 are targets that are, I think, achievable.
All right. Can I just be Phil Donahue for a minute?
Sure.
You know, he was always Mr. Contrarian. So when you look at the high at 1900,
Mm-hmm.
and then you look at the low at 1050,
Mm-hmm.
and here we are just a little bit above 61.8 of that bear market. Is it possible that this could end up being a failing rally in gold, and that we get something comparable to what we had, like an $800 decline from the 2011 high from here would take us under $1,000 gold? What and what could possibly cause something like that if you just put on your contrarian hat?
I mean, it would be
Nothing, right?
some sort of massive deflation.
Okay.
Is the only thing I could think of. But is it possible? Absolutely. And I think one of the things I've learned being in this game and getting my teeth kicked in several times is you got to be open to all possibilities.
Yeah.
And let price guide you to what is the most probable outcome.
Well, this conflicting possible view would make the grains, which have not come out of the hole yet, that doesn't have a lot of public participation in, my preferred longs over gold. What do you think?
I think the grains are probably a better longer term play, but gold has momentum, right?
Okay, yeah,
it's more
good point.
volatile with momentum.
All right.
So I think they're different ways to attack the same big trend.
Okay.
Here's another one, crude. Same type of pattern. You know, this same type of a bunch of lower highs, flat bottom lows, support here. I'm not saying crude's going to 100, but it's possible.
Pretty ugly week last week when you acquiesced to that, Ben. I mean, you know, compared to other markets, even though gold came off, silver came off, they closed higher on the week. Even though S&Ps came off, they still closed sharply higher on the week, whereas crude really gave up the ghost. And I'm curious what that grid horizontally, that level that intersects with your green trend line, is.
It's with crude, we got to get to above 69.90 to 70 to be bullish.
Okay, that's where the horizontal line is up there,
right
in
in
the
here.
trend line. Okay,
Yep, right in there.
okay.
And I mean, the upside target I have is 95.50, and that the only thing I can think that would be associated with that is some sort of Middle East war.
Yeah, you'd have to choke off the Strait of Hormuz.
Yep, and then we could end up, you know, up in here somewhere.
Okay.
That's crude.
So this pullback in crude could be a great buying opportunity.
It could. I think it's worth watching, but I want that downtrend line broken, right? I want to see.
So really, you don't get the signal till $69.70.
That's right. So we get up. Let's say get up over here, pull back, and sit on top of that, and that's your go.
All right. So let me ask you this: a lot of people will feel late. Okay, you know, I could have bought crude, you know, under 60 and mid 60s, and here it is, 69.70. God, I think I'll just wait for a pullback. I can't reach. How do you overcome that?
I've been susceptible to that for so many years when I first started trading. Is that, you know, if I don't buy the bottom or if I don't buy the first move, I've missed it. And the way to get over that is to look at the market in a way of where you can figure out where are these levels where I know if I hold this level, I'm going higher. I have a high probability for a successful trade. And that's what it's all about. It's about thinking not in these certainties, but thinking in, if I do this trade every time for the next 100 trades, I'm going to win enough of them to where I'm going to be profitable. I don't know if this one's going to work, but I know over a series of them, they're going to work and I'm going to make money. But you got to have that. You got to have a confidence in doing your homework, doing the analysis, and then you see the breakout like here. Let's say if we saw this breakout and pull back to this level, I know I want to be a buyer here. Do I know that that trade's going to work? No. But I know that over a series of trades, if I buy on support, I'm going to make money.
Okay. It's all in our heads.
It is totally in your head.
And a lot of it is because we're looking back instead of saying what's in front of my face right now.
It's that, Dale, and it's also this desire to be right, right? I want to be right. I want to feel good. I want to have my ego assuaged because I'm right. Instead of, I have a setup, the edge is there, probabilities favor it's going to work, so I'm taking the trade. And if I'm wrong, I know where I'm wrong and I'm going to get out, and I'm willing to risk that amount, and I'm willing to take the shot because I know if I do that 100 times, I'm going to win enough that I'm going to make money. Okay. And that's the way we have to train ourselves to think.
Yeah, it's a new paradigm.
Yep.
For most, it was for me.
Here's copper, old Dr. Copper.
Yeah.
Similar pattern, right? And this
nice.
is what, in looking at all these charts, these are all monthlies, right? This isn't like me curve fitting by picking a 60 here, a 4-minute there, or a daily here. This is all monthlies. There's another big downtrend with a down sloping trend line. Higher lows coming up out of the hole. And if, for the Elliott wave guys, I'm not an Elliott wave guy, I just look at structure, but this is, all these monthlies are showing a potential 1, 2, and are we moving up into a launch 3? Worst case, are we just going to do an ABC up? That'd be a nice move too.
Yeah. Do you find any conflict in the fact that you're looking for inflation and higher energy prices, higher copper prices, which are economically sensitive commodities, and a bear market in stocks while that's happening? Could this be part of the blow off? Would be an inflation rise in the markets with these things happening?
It's certainly possible. The other thing is, what else happened in the 70s economically? Stagflation.
Okay.
Right? Where we have slow economic.
That's a bearish argument for equities.
Yeah.
And then with all these things happening, I'd be curious to see what you're looking at, because I would think this would lead to higher yields, all of these charts that you've presented.
We're going to get to that. Let me show you a couple softs. Here's sugar.
Yeah. Oh, yeah.
Look at the structure on sugar.
Yeah.
Same pattern. Coffee.
Yeah. Yeah.
Similar pattern.
Yeah.
And here's what you just had questions on.
Yeah.
Here's your 10-year treasury.
Yeah.
Flip all those other charts over, and this is what it looks like.
Yeah.
You had a high, lower high, lower high, lower low, lower low, rolling over.
Okay.
So the 10 years rolling over, which again would lead to higher interest rates.
I think we get to the, I don't know if you call them pitchforks, your purple dotted lines that you have there. Are they just speed lines?
Now these are geometric extensions of this triangle here.
Okay.
You can see if we have this little triangle here, and we extend the lines out off of these different points, and then you just repeat them over here.
I'm curious where the red line, horizontal line, and the upper purple dash line meet in confluence, what level that would be.
Up here we have, it's about 134.09 is our resistance.
Okay.
And these, you could say anywhere down here are the targets, right? Any of these lines we could pick up down here.
Okay.
And that's sort of the big picture theme for inflation. The other thing I wanted to talk about, and we don't have a lot of time, but I'll go through it quickly. And you and I have touched on it a little bit today, is talking about trader psychology and how you think about the markets, because it's, in my opinion, for me, my experience has been, this was the turning point in my career as a trader. It was changing the way I thought about what I was doing and how I approached the market. And it starts with, and this is from Mark Douglas's book, Trading in the Zone. There's 5 fundamental truths in the market and trading. And the overwhelming thing we have to understand is every moment in the market is unique, meaning no two trades, no two moments, no two instances are the same, because there's different traders interacting in the market at that moment. So if every moment in the market is unique, how can you survive? How can you know what's going to happen next? Well, one of the important things to think about is you don't need to know what's going to happen next to make money, because we can't know what's going to happen next.
Right.
We can only know that there's a probability of something going to happen next. And if the probabilities are in your favor, you have an edge. Now, this gets to the other thing we just talked about. There's a random distribution between wins and losses. I don't know on any trade I make, on a specific trade, whether it's going to be a winner or a loser. I only know that if I enter with the discipline and if I enter with a system that I put together, that I have an edge. And if I have an edge, I don't know if I'm going to win on that one specific trade, but I know over a series of trades, I'm going to win enough to make money. The thing you talked about, and the thing we all need to know as traders, anything can happen. And if you don't believe anything can happen in the market, and you don't apply that to how you trade or how you manage risk, eventually you're going to get smoked. I saw a funny quote the other day that I thought I'd share with you. It said there's two kinds of traders. There are traders who have blown up an account, and there are traders who are going to blow up an account.
Yeah.
And you have to think that way, that anything can happen in the market. Therefore, you have to manage your risk. The only way you can survive in the markets, given that there's these 5 fundamental truths about it, is you must have an edge. And an edge is nothing more than an increased probability of something happening over something else happening. Now, a lot of people talk about edges, but how do you define an edge? What is an edge, and how do you get an edge? We've sort of categorized edges into a trinity. There's an edge in risk management, there's an edge in trade management, and there's an edge in psychological discipline. Risk management, I'll focus on that. I'll give you an example of it. So let's talk about trade management. Trade management is how you enter, how you exit, how you take profits, how you move your stop, how you manage risk. You got to have a system to do that gives you an edge. Psychological discipline is having the ability to trade with defined rules, and to not have these dealing with uncertainty, dealing with risk, dealing with probability, dealing with fear, dealing with greed, dealing with trauma. You can't have those things negatively affect you, or your trading will suffer. If you can develop a probabilistic mindset, you can handle this boatload of emotional and psychological issues that the market hits us with every day. Because at the end of the day, you still want to be able to leave your office and go pet the dog and not kick the dog.
What about things outside of trading? Do you recommend when people are going through, some type of health issue or some type of crisis in their life, that it's not a good time for them to be trading?
You can't do it, Dale. Because if you can't, if you're
then
not,
I never would have traded, because I've always been in.
well, you better have really good risk management tools.
Okay. Well, I didn't always. And so I'm both of what you said. Someone who already blew up account, and someone who may, although I doubt it. But people have done it more than once.
Yeah, absolutely. I mean, I've done it more than once.
Okay. I knew I'd get a confession out of you.
And you got to you have to have your head right. So,
yeah.
Or you better have serious discipline in dealing with risk management. Because as soon as you start going like, oh, well, I'll just wait till it bounces before I get out, or I'm going to double down because I know it's going to work, and all that type of thinking destroys you. It destroys your accounts.
I like this, what do you advocate putting in a physical paper stop on your trades?
Absolutely.
Okay, because anyone who's listening right here, the last time I used a mental stop, my first stop was a mental institution. So
it'll destroy you.
Yeah. So if you get picked off and you're wrong the mark, right the market, wrong the trade, you recommit. because it's at one time you don't have it in.
You live to
Okay,
fight
Ben.
another day. And here's an example of how we handle that let me go back, that initial risk we talked about, the risk management.
Yeah.
For entries, there's something we post every day, which is called the fuse for the ES, which is for short-term market movement. It's a level at which it's sort of the supply demand level, the support resistance level that the market will rotate around. It gives us well-defined risk when we use that, because we know above this level it's bullish, below this level it's bearish. Don't try and fight the market if you're on the wrong side of those. We combine that with high probability patterns, which we reviewed on our last talk. And the key thing here is it works in bear markets, it works in bullish trends, it works in flat conditions. And that's what you want. You want something that's going to help you deal with this uncertainty and this sort of unlimited environment where anything can happen. You have defined rules where you know if X happens, I got to do Y. If A happens, I got to do B, and make it mechanical. I'll show you some examples from yesterday. We don't cherry pick. This is just yesterday's market. So the red lines here are the fuse lines. The red lines here are the two different fuse lines. Here is a support resistance line that we give as well. So we started the morning off doing what we call a hellfire pattern, which is this triangle around the line. Once we broke above it, you could trade into this move higher. The next fuse line came in later in the day. Here's where it is. You know that and this pattern is called a flashover pattern, which has a flat top and an ascending higher bottoms coming in. This is a bullish pattern. Once we break out, come back and test the line, you know you can play long. And it's just one of the examples of how you have to manage risk. This gives us an edge in managing risk.
Okay. Well, Ben, Happy New Year, brother.
Happy New Year to you, Dale.
I hope that for you and the people you work with, that it's a gusher for you guys, okay, along with crude breaking out over $69. Some great looks and much respect, my trading warrior brother.
Thank you, Dale. Always appreciate spending time with you.
Okay, everyone, so that's a wrap. Turnaround Tuesday, good hunting, and we'll catch you tomorrow. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. And I'm just going to end the meeting here. See you, Prabhash and Monica. Okay. And adios.